Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic day today. In today's video, we are taking a look at the weekly RSI, the weekly candle close, the short-term price action, the macro expectations, and everything else you need to know about what is happening on both the higher time frames and the immediate price action. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. And if you were interested in taking your trading to the next level, click the pinned comment. Contact our admin to join our VIP channel. We have our entire trading track record, 50 plus months, and a 10-minute video to show you inside the channel in that pinned comment. You'll get access to two main channels, the main VIP channel of over 700 members, where we post trading setups with the exact entries, targets, stop losses, trade justification, and so much more, including access to a variety of group chats from the general chat to the trading chart and education chat, to the news, the help, the trade setup, and so much more. Check it out, guys. Join up. We'll see you in there, and let's dive into the content. So as we can see, we just had the weekly candle close for Bitcoin. Now, the weekly candle close itself was a pretty solid weekly candle. We not only saw the weekly price sustain above the 50 EMA and the upper band of the Gaussian channel, which we know to be the points of support where, if broken, will initiate that next leg down. But not only did we see that, we saw a bullish engulfing weekly candle, which is simply the weekly closing price was able to exceed the opening price of the prior candle, signifying a dramatic change in sentiment in the market during that weekly period. And that was heavily as a consequence to the pause in tariffs. And as we can see here, the trajectory of the price action is still pushing downwards, but we are coming very close now to retesting that weekly downtrend, and we may even be loading a potential RSI breakout this week. So we've actually broken that RSI now. We did not close the weekly above it. In fact, the weekly closed just under that trend line. But if we are able to sustain these prices into the new week, into the end of this week, we'll definitely have that weekly RSI. So there is some optimism here in the market. We can see the sellers are beginning to exhaust. The big question is, will the policies that have facilitated this rally over the last week, particularly the tariff news, hold up this week, or is there going to be new news which dramatically changes those expectations and thus influences the direction of the market downward? So we do have some risk factors here. We're going to be taking a look at the possibilities of either direction, the confirmations we look for, and the significance of all the important levels on both the high time frame and the short term. So let's start on the market data. 24-hour volume at 12.83% toward the upside. This is 243 billion in volume here. A little bit up over the weekend, actually holding pretty well. Generally do see volume drop through the weekend, so a good sight to see over here. With liquidations up 36% at 326 million, 224 million coming from longs, and 102 million coming from shorts. Looking at the DXY has plummeted. Absolutely plummeted, dropping from that around 110, guys, since the start of the year down to 99. We're actually sitting under 100 for the first time. Actually, this is the lowest we have actually seen the candle essentially open or even close since all the way back in 2022. So some brutal downward movement here for DXY, and we are expecting DXY to actually continue lower. We are still looking for that 92, 93 target by around about the end of 2025, beginning of 2026. If you have been following the channel, you would know that we were expecting a correction to the deviation to the low side ever since we had an inability to sustain above the range high. We said already, when we have these horizontal consolidations, when we see deviation to the high, we end up seeing the price action correct correct to the low. What happens on one side of the channel generally plays out on the other side. So we have seen that play out now, but our expectations are still going to be lower. But these things take time. This was a lot quicker than expected, again, as a consequence of the uncertainty developing around future economic decisions regards to interest rates and, of course, the tariff news. But we may not see that aggressive continuations downwards develop. It may take many, many months, maybe even a year or so, to actually see the price consolidate toward that downward target. So we are still watching that over the macro time frame. The S&P 500, let's take a look at this, guys. A fantastic week for the S&P 500. Now, again, policy stipulates demand. This is something I've yapped on about for a very long time on the channel. As you know, we've talked in massive amounts of detail in regards to how policy influences asset prices and how particularly perceived systematic risk is one of the main, I guess, aspects we can use to derive how asset prices are going to move in future periods. And one of the main, I guess, things that formulate the trajectory of what perceived systematic risk is going to be is the expectations of future interest rate decisions. We've talked a lot on this channel about how these interest rate decisions really do alter in real time the price of these assets, as it does really impact the expectations for risk in future periods of the market. And the market is future seeing. It tries to price in what is expected later currently. So when we see these policies come out, such as what we had with the pause in these tariffs, we generally do see the market become incredibly efficient at essentially pricing that in and readjusting to where it is perceived to have value. So we've seen the price action massively skyrocket over the last week. In fact, we saw probably the largest daily green candle in S&P 500 I can remember of in recent history, which is absolutely insane. Even with this, we have now approached a level of resistance we need to be aware of. This is going to be the prior breakup structure. Prior support becomes current resistance. So for the S&P 500 to now continue upwards, we need to see this little break. Until we break, we are at resistance. We do have the risk of continuations or rejections here. So we wouldn't get too trigger happy here. This, of course, is a resistance. And when we have this very small piece of insurance we can pay to be correct, waiting for those resistances to break before expecting higher is always the way to play. So that is it, guys. That is the S&P 500. Let's move over to Bitcoin. Now, before we get into Bitcoin, make sure to go ahead and sign up to the links down below to BitGet, BitUnix, or BingX. You'll support the channel. You'll support me making the content, and most importantly, you'll support yourself because you'll get access to a trading fee discount of 15% for life, which can build up to 45% based on your trading volume. You'll support me making the content, and you'll be trading on exchanges I use and trust daily. Check out the video. We'll be just back in a second. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's go ahead and jump on into the content. So let's take a look at the recent weekly close, then take a look at the significance of the key levels, both technically and structurally, and then go down to the short term. So as we can see, the weekly candle close was pretty good for Bitcoin, right? We had a bullish engulfing candle, which was explained just moments ago, which is essentially that we had that weekly closing price exceed the opening price of the prior candle. This is a good sign, right? It shows there's been a dramatic shift in sentiment during this week. And like we said already, policy stipulates demand heavily as a consequence of the shifting economic climate here, mostly as a consequence of those tariff pauses, right? So we saw that price action really surge. Now, as we know, the tariff pauses have had a dramatic bullish impact on the price action. So we need to be aware of how that news is going to develop moving into the next 9-day period. Are we going to see changes in the expectations? We're going to see Trump turn around and do a 180. We're going to see that 9-day pause turn into a 30-day pause. Are we going to see it turn into a 60-day pause? Are we going to see it completely eliminated? Because these things are going to have dramatic impacts on the direction of the price action. Remember, the charts, the technicals tell you everything you need to know, but what you can't tell from the charts is how these economic developments are going to develop. What decisions these politicians are going to make. These things are real-time factors which get implemented and immediately absorbed by the market, and the market is very efficient and it immediately reacts in the direction of which that news is perceived to be bullish or bearish. So we couldn't tell there was going to be a 90-day pause until it happened, and when it happened, the price action immediately adjusted to that and rallied toward the upside, and that sometimes can be all it takes to dramatically shift the expectations of the market. And that is why, as a trader, you need to remain adaptable and you need to always have plans for either direction. I've been yapping on it about why you should be looking at both directions and never blinding yourself to one direction, because if you blind yourself to one direction, you miss out on all of the opportunities the other direction presents. So in this instance, are we bullish for Bitcoin? The answer is, on the higher time frame, no, not yet. We're not looking for immediate continuations, but we are definitely now building the foundations of which we need for that to occur, right? We've had the 50 EMA retest of support and hold. We've had the Gaussian channel retest of support and hold. Two fantastic things. We've had now the RSI attempting to break this downtrend and the price action coming up to retest the trend line. So as you know, we look for three things: trend, structure, and strength. When we're looking for confirmations, we watch for at least two of those things to be sure, and three of those things to be more confident. When we're looking at the trend line, we are now retesting. We can go to a daily chart. We are now retesting. We're getting very, very close to retesting this daily trend line. The daily trend line, as we can see, has been a trend line we've been under since the 20th of January. We can also see the 50 EMA has been a level we have been essentially under since February, having only really shown a wick above here a few times. That lines up with that daily trend line. So we know already we are approaching a level of resistance over here. This lines up with our trend line. We know this trend line, of course, lines up with our RSI trend line, signifies the price action is able to close at least this weekly candle above the opening price of the last. So essentially, if this weekly candle can close green, we will see the RSI break up and we will see the trend line break. That would indicate to us that this downtrend is over. This is going to be a local bottom, and we are expecting uptrends to develop into that 89K level again from that point onwards. So we do have the potential for reversals to develop here. We'll talk a little bit more in just a second. Let's go over the worst case scenarios here really quickly and the bearish case scenarios. For the price action to continue lower, as we mentioned, the points we need to break are going to be the 50 EMA and the Gaussian channel upper band on the weekly. Historically, when we break through these levels, we see dramatic corrections in the price action, which take us generally underneath the Gaussian channel lower band and into the 200 moving average. So this is still a very real potential for Bitcoin while we remain below 89,000. Only when we break above 89,000 and clear this prior level of support, which is a current level of resistance. If we go to the daily chart, we can see that much more clearly. Only when we clear through this level of major resistance do we really eliminate that downward move as a potential, right? As a potential. The probabilities are moving away from its favor, particularly with this weekly candle, okay, as a consequence of the policy change around tariffs. But it is still a possibility while we remain above 89,000. But as we've mentioned before, for that move to actually activate, for it to trigger, it still needs a weekly close below 50 EMA. It still needs a weekly close below the Gaussian channel. And we are now pushing a little bit further away from that. So the possibility of that becomes a little bit lower and lower. Should I say the probability becomes a little bit lower and lower. So overall, guys, the weekly close was good. We have a good week incoming for Bitcoin, hopefully, and we have a very important weekly candle closing coming, because this weekly candle close, if it closes green, there's a very good chance that may facilitate some more upward continuations in the price action. We do have to be a little bit more aware of the potential news that is developing and potential shifts in the tariffs, because we have seen now how reactive the market is to those tariff decisions, particularly around decisions to pause those tariffs. So we have to be very much aware to that. Let's take a look now at the bullish scenario. So as we mentioned already, for the bullish scenario, there are two scenarios. Scenario number one, we closed the weekly above this level. We facilitate a continuation at 89,000. 89,000 is a prior level of resistance. When we break above 89,000, that is when we are expecting continuations potentially up into 100, potentially even higher. Until then, 89,000 is still going to be a level of resistance, and what we could potentially see is again a rally into it, only for corrections to develop and the 52 eventually be lost. Those are all possible scenarios. So 89 is still the critical level we need to break for the price in terms of structural levels to completely shift bullish. But overall, short-term is looking very optimistic. Let's jump into the short-term price action. So short-term price action here, guys, let's just delete everything really quickly and zoom out to a 4-hourly chart. We can see our key levels. Of course, this is going to be the short-term price action. You can see we have got a major level of horizontal resistance right over here. And this level, by no surprise, is of course the $89,000 level. This is a level we have been sitting now underneath since around about the 8th of March. So the beginning of March into now, the 14th of April. So around 1 month to 2 weeks, 1 month and 2 weeks. And as we can see, we've had now 2 major ejections from this $89,000 level. As we can see on the short term, this is going to be the level of which we need to clear to push into that 92 liquidity and potentially into that $94,000 liquidity. If we rewind the chart over here and bring up the price structure we could see we had a falling wedge, a rising wedge structure over here, which is an exhaustion pattern. The price action did break down from that rising structure over here, pushing into these change of character levels, pushing into the POC, pushing into our prior 0.1 highs, and again, attempting to go lower. We have seen a bit of strength shown over here in the short term, particularly moving into the weekly. That is generally expected. But again, if we cannot break through these prior highs, it is expected the price action will continue in the expectation of which we have these consolidations, which is downward into at least 0.3, which is going to be this point right over here at 78,000. For the price action to turn bullish on the short term, we need to clear through this week high at 86,000. Clearing that week high at 86,000 will very likely facilitate a move into our buy side liquidity, which will be testing that 88.9 to 90, or should I 88.8 to $89,000 level. So there is potential here. It is looking pretty decent. I don't think it's looking amazing on the immediate short term, but if we're zooming out to the higher time frame charts, we can really now see how that price action is beginning to adapt and develop to the recent policy changes and how that has potentially shifted the possibility for continuations. Let's move over to the daily chart now. Looking at the daily chart, let's just delete all this stuff really quickly. The daily chart, of course, very important level, the daily downtrend. We can see already 3 daily candles now retesting this level under the 50, under the 200, attempting to break out. This is where we are now on the short term. We are now retesting that daily downtrend as we speak. Again, if we fail to do so, if we fail to get above that prior high, which we mentioned at 86, we don't break through this trend line, we reject back downwards. So we need to break through this trend line to continue upwards. And for that to occur, like we said, we need to invalidate this seemingly bearish structure. If this structure over here invalidates, if we see the breakdown not continue, if we see this breakdown which we had over here completely absorb this selling pressure and not facilitate a continuation which was structurally expected around a 7% probability, we will then see the price action rise. So I'm not entirely confident yet that we are going to see an immediate continuation. If we're looking from a structural perspective, from a technical perspective over here, it is still looking like there is potential for continuations down. We have to assume that is the case until this prior high is taken out. If we're looking at the higher time frame charts, again, like we've mentioned, we are looking very good. We've had some really good things occur, but we haven't got through that daily downtrend yet. The trend hasn't broken just yet. The good things which have occurred here on the weekly chart, which is the weekly close being good and the bounce from these levels, but we haven't really broken that trend. So we're getting very close. As you can tell by what I'm trying to tell you, I guess the tides are turning in favor of the bulls. And again, policy stipulates demand, so there's no surprise of that. But if we're looking from our structural and technical levels, we're not quite there yet. We're not quite there. We're super, super close. We've got this downtrend we are retesting. We've got the daily 50 EMA we are retesting. We've got the short-term structural levels of resistance at 86,000, which correspond with this daily downtrend and the invalidation of a bearish development, which is the rising wedge formation. So there's a lot going on, and there's a lot to pay attention to in the upcoming week. Let's go ahead, guys, and finish up again on the short-term expectations, and also finish up on the total altcoin and total market cap. So as we mentioned over here, this is the 1 hourly chart. Let's go down to a 30-minute chart. We can see already the 200 moving average acting as a pretty solid area of support. If we do not clear through this 86K high, and remember, 86K high, we have to also now correspond this level with that weekly downtrend, okay? If we do not break through this level, the expectation is we continue into these gaps over here, into these lower levels of liquidity. Simple as that. If we break through here, expect that bearish structure to invalidate and the price action to continue higher. That is very simple in the short term. Until then, expect sideways chop and continuation, as we have seen through the weekend. Looking at the total market cap, guys, total market cap, again, showing some interesting signs. We had this major breakdown on the total market cap over here. And again, the tariffs pause really saved the market. I can't really explain how much it has saved the market, because we were looking really, really grim for a second there on the total market cap, with the price closing below that weekly uptrend over here and the RSI breaking below. But that tariff news really came in clutch and saved the market for potential disaster. And we have seen, again, a nice rally for Bitcoin, the S&P 500, or traditional assets. And now we have this downtrend here on the total, where it's broken, we could see that continuation upwards. Moving over to the altcoin market, same goes to the altcoin market, but the altcoin market didn't really see that aggressive breakdown yet. In fact, we've seen it a slow, drawn out bleed out for most altcoins. We've had a massive, massive supply issue with the fact that we've just got hundreds, maybe thousands more altcoins this cycle than we had in prior cycles. So the money, the same amount of, or a little bit more money is dispersed amongst, 1,000 times more places. So each individual altcoin performs dramatically worse. But when we're looking at the total market cap for altcoins was able to sustain above that RSI level. And while we've sustained above here, there's a chance for reversals. Only upon the loss of there do we expect that 20-30% correction for altcoins to develop. So that is it for today's analysis, guys. I hope you enjoyed. Hope you have a fantastic rest of your day. Pay very close attention. It is going to be a very big week. I think this week is going to be very, very big. I think if we see news, if we see random adjustments with the tariffs, it's going to happen this week. The price action is in a pivotal moment. The S&P 500 is testing resistance. Bitcoin chart is about to have a momentum shift. The daily or the weekly downtrend we've been in since the start of the year is being tested. There is a hell of a lot happening that could really, really alter the expectations on the short term and the macro of Bitcoin this week. So pay attention, lock in, as they say, okay, and pay attention to any news developments, and we'll be sure to update you guys on this channel this week. Thanks for tuning in. Catch you guys in tomorrow's video. I'll see you then. Bye.